Welcome to Breaking News to Trading Moves.
Glad to be here.
So, imagine you are building an $80 million fighter jet.
Right, state of the art.
Exactly. You have the airframe, the avionics, you have the engines. But the entire project is, well, it's completely grounded.
Because you're missing one tiny part.
Yeah, because you cannot source a specific, highly engineered piece of metal about the size of a standard hockey puck.
It's crazy to think about.
It really is. And that scenario is the stark reality of the global heavy rare earth supply chain right now. Which brings us to a major headline that just crossed the wire.
Right, the Serra Verde deal.
Yep. USA rare earth ticker USAR has announced a $2.8 billion cash and stock deal to acquire Brazil's Serra Verde.
That is a massive amount of capital changing hands.
It is. And our mission for you today is to simply look at this headline and evaluate the specific winners and losers from this announcement. We are going to avoid any exaggerated claims about, immediate market transformations. We just want to examine the direct, measurable outcomes of this deal.
So to set the proper context for you, I think we first have to understand what Serra Verde actually brings to the table.
Right.
Because this is a major heavy rare earth asset. And heavy rare earths are, well, they are absolutely critical. They are the key non-negotiable ingredients for manufacturing permanent magnets.
And those magnets go into basically everything high-tech.
Oh, absolutely. They are the beating heart of modern defense systems, electric vehicles, consumer electronics, and vital industrial equipment.
Wow.
Yeah. Without these specific elements, manufacturing those components becomes physically impossible. You simply cannot swap in standard iron or copper and expect the same performance.
I want to pause on that physical impossibility for a second.
Mm-hmm.
Because we hear the term rare earths thrown around constantly in financial media.
Constantly, yeah.
But what makes these heavy rare earths so irreplaceable? Like, why does a $2.8 billion deal happen just to secure them?
It all comes down to operating under extreme physical stress. So think about a permanent magnet inside an electric vehicle motor or a missile guidance system. Those environments generate an incredible amount of heat.
Right, they get incredibly hot.
Exactly. And a standard magnet will literally lose its magnetic field. It will just demagnetize when it gets too hot.
Oh, wow. I didn't realize that.
Yeah, so heavy rare earth elements, specifically dysprosium and terbium, they act like a thermal shield for the magnet.
Okay.
When you alloy a tiny amount of dysprosium into a permanent magnet, it allows that magnet to retain its precise magnetic properties at blisteringly high temperatures.
So without that exact chemical element pulled from the ground, your EV motor simply stops functioning halfway down the highway.
Exactly.
Yeah.
Or your aerospace actuator fails mid-flight.
That makes the stakes incredibly clear, so you might not realize it. But the smartphone in your pocket and the EV in your driveway are essentially competing for the exact same microscopic pinch of material mined half a world away.
That's a great way to put it.
So we have the headline of this acquisition, and the conversation naturally moves to the most direct outcome, which is the producers of these materials.
Right. This deal really strengthens the broader investment case for non-China rare earth supply chains.
Which has been a vulnerability for a while now.
Oh, for years. The market has recognized this strategic vulnerability. Investors evaluating the landscape often look for miners and processors that can, help reduce Western dependence on single country suppliers.
Right.
So by acquiring a producing asset in Brazil, a U.S. company takes a clear, tangible step toward building that alternative supply chain. It increases attention on U.S.-listed companies that are tied to critical minerals and strategic material independence.
I like to think about relying on one country for rare earths, like a sprawling multi-billion-dollar factory relying on a single, perpetually congested highway for all of its daily deliveries.
Yeah, every single piece of critical inventory has to travel down that exact same road.
Exactly. If there is a roadblock or an accident or a toll increase, the entire factory shuts down.
It's a total bottleneck.
Right. But when a brand new route officially opens, the companies actively paving that new road get immediate attention. They are the ones providing the alternative path.
Absolutely.
And looking at the specific direct beneficiaries paving that road, we have USA Rare Earth, ticker USAR, MP Materials, ticker MP, and Energy Fuels, ticker UUU.
And the inclusion of MP Materials and Energy Fuels as winners is directly tied to the validation of the broader thesis.
How so?
Well, when a $2.8 billion transaction occurs in this very specific sector, it demonstrates that institutional capital is actively seeking non-China supply chain assets.
Okay, That makes sense.
MP Materials operates the Mountain Pass mine in California, and Energy Fuels is developing rare earth processing capabilities down in Utah.
So it's about the domestic operations.
Exactly. The Serra Verde acquisition by USA Rare Earth reinforces the strategic value of those domestic operations. It proves that the market is willing to assign massive financial premiums to assets that sit outside the legacy supply bottlenecks.
Okay, so if USA Rare Earth is now successfully securing this material out of the ground to Brazil, whose factory floor is desperately waiting for these shipments.
A lot of them.
Right. That brings us to the downstream winners, starting with the defense and aerospace sector. The companies here are L3 Harris Technologies, ticker LHX, Northrop Grumman, ticker NOC, and RTX Corporation, ticker RTX.
Yes.
And we just talked about heat resistance, so defense systems clearly rely heavily on these magnets.
They absolutely do, and the volume they require is just staggering. Think about the precision actuators in fifth-generation fighter jets.
Or radar systems.
Right, advanced radar installations, or the targeting optics on a naval destroyer. All of these require permanent magnets that can operate under extreme, punishing conditions without failing.
So a secure Western supply really supports a stronger long-term outlook for these specific defense contractors.
Exactly. The reason is simple. Their entire production schedule and their ability to fulfill government contracts relies on having guaranteed access to those materials. If they cannot procure the magnets, they simply cannot deliver the hardware.
That makes perfect sense for national security applications. Now let us look at the next set of buyers eagerly watching this new supply route, which is electric vehicles and automation.
Right, a massive market.
Huge.
Yeah.
We're evaluating Tesla, ticker TSLA, Rivian Automotive, ticker RIVN, and Rockwell Automation, ticker ROK.
Okay.
I want to clarify the mechanics here for you. Is easing supply risks the primary reason these companies are viewed favorably by the market today?
Yes, it is the primary driver. A stronger supply chain outside China is strategically positive for companies heavily exposed to electrification and industrial automation.
Because of the motors.
Right. Let us look at the mechanics of an EV. Permanent magnets are the absolute core component in EV drivetrains. They are responsible for converting the electrical energy stored in the battery pack into the mechanical energy that actually turns the wheels on the pavement.
Okay.
You need highly efficient, incredibly powerful magnets to maximize the driving range of the vehicle.
And that logic applies directly to the factory floor as well, correct? Like Rockwell Automation is building the machines that build the machines.
Precisely. For robotics and factory automation systems, you need those same types of high-efficiency motors for precise, millimeter-perfect movements on an assembly line.
Like a robotic arm.
Yeah, if a robotic arm is welding a car chassis, the motors driving its joints rely on rare earth magnets. So if investors begin to believe that the supply risks for these underlying materials can gradually ease due to deals like the Serra Verde acquisition.
Their outlook improves.
Exactly. The long-term manufacturing outlook for these automation and EV companies improves. They can plan their production roadmaps with far more confidence.
Okay, so having established those winners, we really need to pivot to the losers.
Yes, we do.
And this starts with a counterintuitive group sitting right in the exact same sector. There is a glaring paradox here, honestly.
There is.
MP Materials, ticker MP, and Energy Fuels, ticker UUU, were just listed as winners. But they are also actively sitting on the list of relative losers, along with Cleveland Cliffs, ticker CLF. How can a company be both a winner and a loser on the exact same day?
I know it sounds contradictory, but it is a vital distinction to make in financial analysis. It comes down to understanding absolute versus relative positioning.
Okay, unpack it. Explain that for us.
So a company can benefit from the broader theme of an announcement, in this case, the validation of Western rare earth assets, while simultaneously losing its competitive standing for fresh investment dollars.
It is like a professional sports franchise operating under a strict salary cap.
That's a good comparison.
The whole team might benefit from a winning streak, but when one player suddenly becomes the undisputed superstar like the complete package, the front office has a problem.
Right. They cannot just invent new money.
Exactly. To pay that superstar what they command, they have to pull capital away from the supporting players. In this market scenario, USA Rare Earth, ticker USAR, suddenly becomes that star player with the more complete story.
That is a highly accurate way to frame the mechanics of capital rotation, because USA Rare Earth may now attract the bulk of investor attention, policy interest, and narrative momentum.
Leaving the others behind.
Well, institutional capital often operates within very rigid specific sector allocations. If a large mutual fund or a pension fund has a designated finite amount of capital strictly allocated for rare earth exposure, they have a choice to make.
Right.
The addition of the Serra Verde producing asset to USA Rare Earth's portfolio might make it the single most attractive option on the board.
So they reallocate.
Exactly. As a result, competing U.S.-listed materials names face a relative loss. Investors will literally sell shares of the competing developers to free up the cash needed to purchase shares of the company that now holds a major producing heavy rare earth asset.
So the pie of investment dollars does not necessarily get bigger today. The funds just slide across the table toward the most de-risked asset.
Exactly. And companies like Cleveland-Cliffs, ticker CLF, which operates in the broader steel and materials space and relies heavily on complex supply chains, also face a subtle rotation.
Because the capital is moving.
Capital aggressively seeks out the most direct beneficiaries of a major headline, leaving adjacent materials companies starved for momentum in the near term.
That brings us to the final piece of the puzzle.
Yeah.
From the competing miners, the discussion flows back down the supply chain to downstream companies that still face immediate, painful struggles despite this headline.
Yeah, the real near-term losers.
Right. We are talking about the downstream losers dealing with sourcing uncertainty and massive execution risk.
The overarching reality here is that the near-term supply picture remains exceptionally tight.
Even with this deal.
Yes. Because while the long-term direction mapped out by this deal is positive, new processing capacity ramps up incredibly slowly. Mining and processing rare earths is honestly one of the most complex industrial processes on the planet.
I really want to break that down because I think a lot of people assume mining is just digging dirt out of the earth, washing it off, and selling the metal.
If only it were that simple.
Right. Why is the timeline for new rare earth production so painfully long?
Because it is a nightmare of chemistry. Rare earth elements are not found in neat, isolated chunks. They are tightly clumped together in the Earth's crust, and they are chemical twins.
Chemical twins?
Yeah, they are nearly identical in their atomic structure. In some cases, the only difference between two rare earth elements is a single electron.
Wow.
So separating them is not a physical process like sifting gold from river sand. It requires a microscopic chemical untangling.
It sounds expensive.
It is. You have to dissolve the extracted ore into massive liquid acid baths. Then you run the solution through hundreds, sometimes thousands, of sequential chemical solvent extraction stages.
Thousands of stages.
Yes. The process requires specialized facilities that cost hundreds of millions of dollars to build, extensive environmental permitting, and years of optimization to reach the exceptionally high purity required before the material can be alloyed into a functioning magnet.
So during that multi-year waiting period while these chemical baths are being built and permitted, companies exposed to rare earth cost volatility are at a severe disadvantage.
Exactly.
In the electronics and industrial space, we are looking at Apple, ticker AAPL, Eaton, ticker ETN, and Emerson Electric, ticker EMR.
Precisely. They face intense cost pressure and sourcing uncertainty right now, today.
Because they still need the magnets.
Right. Before the benefits of new supply from Brazil or anywhere else are fully realized on the open market, these massive electronics businesses and downstream manufacturers still have to procure materials in a highly constrained environment.
And they use a lot of them.
Every single smartphone, tablet, and commercial electrical system relies on these tiny components. If shortages persist in the physical market over the next 12 to 24 months, their input costs remain elevated, which directly eats into their profit margins.
And we add major auto and industrial manufacturers to that list of near-term losers. General Motors, ticker GM, Ford Motor, ticker F, and Honeywell, ticker HON.
Yeah, auto is highly exposed.
Oh, wait, I need to push back here.
Go ahead.
If USA Rare Earth just secured this massive supply of heavy rare earths in Brazil, shouldn't Ford and GM stock be rallying? The supply chain is theoretically fixed now. Why are they sitting in the loser category today?
It is a very fair question, but it comes down to the difference between a long-term corporate strategy and the immediate demands of quarterly earnings.
Okay.
Financial markets absolutely love a good 10-year plan, but they trade aggressively on what a company can physically ship this quarter. Until the actual mining production, the chemical processing, and the final magnet manufacturing capacity all scale up simultaneously, these manufacturers are viewed as highly exposed.
Because they have goals to meet right now.
Exactly. Ford and GM have massive, unyielding electrification targets to hit over the next few years. They have factory lines running today. The Serra Verde acquisition is a positive step for the end of the decade, but it does not deliver a single finished magnet to a Michigan assembly plant tomorrow morning.
Right.
The market perfectly recognizes the massive chronological gap between a multi-billion-dollar headline and the actual delivery of physical goods.
So essentially, Wall Street is punishing them for the wait time.
Yes.
Investors are pricing in the immediate reality of bottlenecks and execution risk. A headline about dirt in Brazil does not solve a production line stoppage in Detroit next month.
Exactly. For Honeywell, producing advanced aerospace and building technologies, the story is identical. They cannot build future revenue projections on unrefined ore. They need finished high-purity components ready for assembly.
Right.
Until that entire domestic supply chain pipeline is flowing smoothly, they carry the risk of elevated material costs.
Well, let us clearly summarize the core takeaways for you based on our evaluation of this specific headline. USA Rare Earth, ticker USAR, emerges as the clearest direct winner, taking a major step toward validating the non-China supply chain thesis.
Obviously.
The broader bullish view covers U.S.-listed rare earth developers, defense contractors, and electrification names who desperately need these permanent magnets to function.
Yeah.
The cautious angle, the losers, shows that competing materials developers lose relative capital attention as funds rotate toward the more complete story. Finally, downstream manufacturers in auto and electronics face continued supply tightness and elevated costs until output truly scales to meet demand.
As capital aggressively concentrates on these fully integrated supply chains, one crucial question remains. How will major downstream manufacturers alter their long-term legal contracts to secure these vital materials while actively waiting for processing capacity to catch up?
This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.